Welcome to Money Talk with Aaron Ricketts, presented by Ricketts and Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk with Aaron Ricketts are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial advisor, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Aaron's with us in the studios. We have made it to March.
And halfway through tax season.
Oh, wow.
By my calculation.
Okay, so I think that probably tells us where we're headed today.
Right, let's talk about it. Boring old taxes.
Okay.
Some people, it's a joyous time, right?
Right.
Big refunds, knowing that they're probably going to get a refund, and then others that wait till the last minute for one reason or the other, but many times it's because they're going to have to pay something.
Yeah, well, and I understand, or I've been hearing that many of those who are grumbling a little bit because they thought the refund they were getting is not quite as big as what they're getting.
That's the first thing I want to talk about, and we'll clear the air on that. I call it clearing the air, just give you some information on it. So because we had that big tax law change that went into effect in 2018, the government issued new withholding tax tables last year. And maybe some remember at the beginning of the year, all these companies most of them use software that you plug in the employee's wages, and it tells you, it does the withholding factors and all that, it takes care of all that. Well, that information didn't come out from the government in a timely fashion because the law was passed late in the year in 17. So early 18, it finally went into effect, and then people got mostly more money in their weekly pay, biweekly pay, monthly pay. And so there was this media blitz, because I remember seeing this and reading about the IRS going out and even buying time spots on national media, national news, saying, this is what's going to happen this year. The tax tables are going to cause you to get more money in your paycheck. So that means it's possible you'll have less of a refund this next year. Trying to get people to talk to their employer to possibly get a W-4 to change their tax withholdings or their exemptions on that. So a lot of people just didn't do that, which is understandable. You get your first couple checks and there's, maybe $20, $30, $40 more or more per paycheck. So you're like, I'll take this. Well, what people weren't aware of is if you have less withheld, you're going to get less of a refund, or it's very possible that you would be getting less of a refund. So they're saying that refunds so far are down about 8.5%. That's the number that's being thrown out there by the IRS. That just means the refund, the money you're getting back that you overpaid to the government, is less than it has been. It's not for everybody, but it is for some. It's not saying that individuals are paying more under the new tax law. Most people's federal income tax liability will actually be less, right? That's the whole purpose of this tax reform, was to reduce the tax for most. Financial planners like us usually advise against getting large refunds when filing returns because it's like akin to giving the government a tax-free loan, throughout the whole year, and you're just kind of getting some money back and it's interest-free. But a lot of us see it as a windfall, right? It's that extra money, and it's something we've been doing year after year after year. We plan on that $2,000, $3,000, $4,000, $5,000 or more that's coming back to us in February or March to use it for things to, buy certain things, maybe pay down some debt, get a new TV, do some house repairs. A lot of people fund a vacation with it. So I understand I don't get too harpy, is that a word, on people. I used to. I'd say, is it really necessary? I mean, you make $50,000 a year and you're getting a $5,000 tax refund. Pretty much you're given, twice as much as you need to give to the government to take care of that. So to take care of your tax bill and you're just waiting for them to give it back to you. But I get it. It's a way to save because you certainly can't get at it, right? That you could get at a savings account if you're just putting money in there. So I'm not going to be too harpy on people about that anymore. So in the new on the new tax form, if people look at their tax forms, which they should, right, John? They should look over their tax form, their 1040. To me, the most important line on the new tax form, because there's a change because of all the tax reform changes that we had. Line 15 is your total tax. That's the total tax that you owe to the federal government. You should look at your previous year's return, the year before, maybe even 3, 4, 5 years, and look at your gross income versus how much total tax you're paying. That is the number that you should be focused on, not your refund. The biggest expense for most people in their lifetime are taxes, but we don't think about that. We don't talk about it. I'm talking about all taxes, payroll taxes, your income taxes, your state taxes, income taxes, sales tax. If you can figure out a way, which a lot of accountants do, that's their job, to control how much you pay, it's going to be in your benefit in the long run. So people should pay attention to this more. And I know it's a busy time for accountants, and often it's you give them your numbers, they give you the tax form, you sign it, you get your refund, and then you just file the stuff away and never look at it again. If you're somebody who's listening to this conversation saying, I would like to know more, make an appointment with your accountant outside the tax season and have them go through it line by line and show you how these things work. And just don't go through this year's, go through the last couple of years, and they'll explain to you more clearly. That's what I do for my clients. So they have to bring I say have to. I
recommend.
I harpy on them.
Yeah.
I get after them. I want to see those tax returns because that's part of my job to make sure that, first, the tax return is correct, because sometimes we catch some things here and there. Possible that we've had people not take all their forms to the tax person, so we'll catch that stuff. But also, we want to make sure, too, that clients understand it, so I go through it line by line, so they're knowledgeable and they're cognizant of it during the year, that there's some things that they might be able to do, especially in retirement. If you're taking income, let's say from your IRA, there's things that you can do to control how much tax you pay, or you might be able to take more from your IRA and not pay any tax. So, that's my job, and I want to look at that stuff. So again, line 15, to me, the most important line on your tax return. The other important line is line 10. That's your taxable income. So that's after all your deductions. And then there's there's lines right between 10 and 15. Those are your credit lines. So it's not complicated, but there is information there that might help you, make good decisions during the year.
I mean, in that line 15, that's supposed to be less as a percentage of your income than in previous years.
That would be the goal, right?
Right.
To try to pay less. You want to know what the tax tables are too, right? You want to know what that next step or level is. And I tell people there's a 0% tax bracket, which is awesome. They got the 10%. This is federal, 10%, 12%, and then a 22%. So isn't it in your best interest to know what that that next tax bracket is, that amount of money that you can make after all your deductions and that you're going to take on your return, what that number is? So if you go above that, 22% tax versus 10% or 12% tax, that 10% difference, maybe you want to contribute more to your 401k. Maybe you want to do something else. Maybe there's some deferral of compensation options that you might have at work. Everybody's situation is different. Business, returns are different than personal returns. So that's what you want to be more knowledgeable. Get that information from your tax accountant.
And, the thing is, or one of the things is, a lot of times people throughout the year, they agonize so much about 2 or 3, 4% percentage points on their investments.
Yes.
Where this particular area could get them much larger returns if they paid serious attention to it.
That's right. And in addition to what you're saying, I believe is, possibly making more contributions to defer the tax is what you're doing when you make contributions to such as a 401k. Deferring 12% versus 22%. And then, of course, the state tax, Michigan is 425 on top of that. That's a significant amount of tax that you're just going to pay it to the government. So why not keep it for yourself, at least defer it until, you start taking it out, and then you pay the tax at that time, or at least put it on your tax return, right? Because you still go through a process. Let's talk about these refunds again. And this is the best story I've come up with. I've heard a few, and the gurus out there try to come up with easy ways to explain tax refunds. And because often we hear, this accountant got me this amount of tax refund for this period of time. Then my buddy, my neighbor, whoever, family member said, hey, go to my accountant because he gets you a bigger tax refund, right? So they go to that person, and sure enough, they get a different or a bigger tax refund. There's no question that can happen. But most of the time, the refunds are all based on just how much money you make and how much you were supposed to pay in versus how much you're getting back. Let me give you an example of why a tax refund does not mean that accountant is a better or worse accountant than another one, and that I paid less in tax because I got a bigger refund. Well, let's debunk those things. Let's say we have two earners, exactly the same, $50,000 each, okay? The first earner, wage earner one, did 100% tax withholding to the federal government. So he paid $50,000 in taxes, right? We got $50,000 income. He had 100% withholding. And then he files his tax return, and it says his total tax was $5,000. His refund is $45,000, right? I know it's ridiculous, but this is how we can think about this. The other earner, wage earner two, same thing, $50,000 wage earner, everything's the same. He does a 10% tax withholding, right? So he had $5,000 withheld, right, from his taxes, from his payroll. When he did his tax return, it said you get zero back. So he got $45,000 in the year, right, because he had $5,000 withheld and he owed $5,000 in taxes. That's wage earner two. Wage earner one had the 100% pay withheld for taxes. He had he had owed $5,000. They both owe $5,000 in taxes because everything's the same, but he got a $45,000 refund. So, I mean, it's silly, isn't it? Just because he got a $45,000 refund doesn't make his pay or the amount of money he got in that year any different than the guy that had his $5,000 withheld. That's what it comes down to. If I come up with a better example, I'll bring it to you. But it makes sense that it doesn't matter. You're going to owe whatever you owe by looking at line 15. And you can do some calculations, right, to see exactly what we call our effective tax rate. Remember I told you the brackets are 10%, 12%, and 22% and on up. Well, we don't usually owe 10%, 12%. When you do the math on it, it might come out to 8.5%. It might come out to 12.8% because you have standard deduction for a married couple under age 65 is $24,000. You're paying no tax on that. So you just keep subtracting that from the gross income until you get to an adjusted gross income, and that's where the calculation is done. And I know I start talking and throwing some words out there about adjusted gross income. Just look at your tax return. It's all written right on there. You say, oh, I see where that goes. I see how that is. A lot of people, especially in the last year, I've seen doing their own tax returns. More are bringing them in and doing their own tax return. This is only a 2-pager now. I should say a 1-pager. And it's really the income and the deductions are in a half a page. So take a look at those tax returns.
And if you want to talk,
give me a call, 265-3540.
All right. Thanks, Aaron.
Thanks, John.
That's Money Talk with Aaron Ricketts, presented by Ricketts and Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk with Aaron Ricketts are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial advisor, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us next Saturday afternoon